Welcome everyone. How's my audio? So we'll just give it a second for others to join. Okay, there's my chat. I was looking for the chat in the comments. There we go. Let me go ahead and move this chat over here. Okay, so can everybody hear me okay? Just give me a thumbs up or leave us something in the comment below. Okay, let's go ahead and get started. No point in wasting time. People can pile in and, ask me questions as we go. So these live streams are really meant to be kind of subscriber stock pick videos, a stock market jam session. We're going to just talk through, whatever charts you guys want to look at, or really what's on your mind. Most of the stuff I talk about is going to be technical analysis, technically based. So when I call out a chart and say whether I'm bullish or bearish on a specific chart, it's really what I see in the chart, not necessarily what's going on in the in the headlines or whatever else. Those obviously have an effect, but I'm a firm believer that gets priced into the chart. It gets priced into the stock market. So the stimulus checks, things like that. Every market participant knows about the stimulus checks. I mean, there's not a person on the planet or in America that doesn't know about the stimulus checks going to get passed. And it was really, they were never in jeopardy. So hedge funds, algos, they all incorporate that. They all, take positions in advance. So by the time the stimulus check passes, it's priced into the chart. That's kind of the basic premise behind that. So let's go ahead and get started. I'll just use the comments to start to, pull up charts, and we'll start to dig in. So feel free to put a comment of something you want me to look at. And there's a little bit of delay between your comments and the audio, so just understand that. All right, we'll start off with Boeing since someone popped that up. All right, and I've charted this in the past. I actually think I looked at this in the last live stream, but that was a pretty limited live stream. I was still working out some kinks. I think I've got them figured out now. All right, so, and someone asked me a while ago what I thought of Boeing, and I could not find any bearish case on Boeing. I let them know that Boeing still looks bullish, and obviously it still is. You know, you can see this last week just exploding higher. Volume, increasing volume. See the volume down here? We got some increasing volume, so that looks bullish. Let's look at what we got here. We can get rid of these. We don't need these anymore. There's probably a gap right here to fill. Yeah, so there's a gap right there on Boeing, and that got filled right there. You can see the day that it filled, it popped and kind of struggled with that gap and closed below it, so leaving you in question. The following day, though, moved up and exploded higher, so that's bullish in general. There's no way to really take that as not. We do have a little bit of a downtrend line coming in Boeing. Let's see where that extends out to. You can see right there. All right, so that's probably going to be your next level of resistance. And then let's pop open, see what the RSI and the PPO look like. Yeah, no real. There's a little bit of bearish divergence right there in the PPO. You can see it. So there's some negative divergence showing up. This is a divergent high right here. And you can see that actually now that so that's a divergent high, but that doesn't necessarily mean that it's, it's a reason to short or a reason to sell your long. There's a trend line down here, and this bottom trend line right here is not my favorite. I just want to point that out because you only have 2 data points. Anytime you only have 2 data points, it's just not enough data to tell you that there's a valid trend line. If I move this up, maybe something like that, I probably get a few more reactions. Something like in there. So, yeah, not the cleanest on the bottom. And when I don't have something that's super clean, then I don't, I usually don't point out those trade ideas, and I don't really have interest in those. What I would say on this is you do have some negative divergence showing up. It's now showing up. So this is a divergent high right here. This is also a divergent high right there. There is some volume, it's okay. It's increasing volume. What I'd look for now, let me get rid of this little line tool. What I'd look for is a rejection or how it's going to behave up around this trend line. What I do is tighten this up. Let's tighten this trend line up just so we can give you the actual. Sorry, this line tool just. All right, there we go. Let's see if I can tighten it up a little bit. Sometimes you got to kind of fiddle with it to get it. Yeah, it's about right there. All right, so I would watch this. Let me see if I can drag this sucker right up in there, about 280, 284.30 or so, or no, 28. Yeah, it's about. We'll just call it 284. All right, you get in the 284 area. I usually just kind of try to round out levels because you're close enough if you're in that area, if you've made a trade on it, that you can, react to that. So 284, look for a rejection around that area. They might step in early and start to sell it. Anytime a level's pretty obvious, you're either going to step in early and sell down, or they'll overshoot it. All right. When everyone's focused on a single level, you're going to usually, people are going to front run the trade. So if you're long, they'll start selling. And if you want to short, they'll start shorting early. And so you'll see that they'll step in early, or you'll overshoot it and then come back in. So, all right, that's what I got on Boeing. Let me kind of roll back in these comments. Cup and handle on gold. Yeah, so that is, let me go to my There is a cup and handle building on gold. It formerly was a rounding bottom. Let me pull that up. So I pointed that out for quite a while. Let me go here. Flip this auto back on. All right, so this is I've had it marked out, but this was a rounding bottom right here, and I was talking about gold, really all the way back here. Gold I was bullish back in 2019 gold, and Barrett Gold was one of my top picks for a while that I really liked. It had since risen about 180%. But you do have, this is a rounding bottom pattern in gold, which is a consolidation pattern. So that means that the institutions are building positions, all right? And that's what this big, long, rounding bottom pattern is, which, and that's a big consolidation pattern. So if you want to look at the bigger picture, you've got, this big flag, you've got this consolidation, and we're potentially going to make, another big flag like this. This is a multi-year uptrend in gold. This lasted from 2001 to 2011, so a 10-year uptrend. And there's obviously the potential. I mean, fundamentally, there's the potential for that. But technically, there's a potential as well, because you've got this big rally, this big 6-year consolidation, and, potentially building a cup and handle. So, this was your rounding bottom. Now it's creating a cup and handle because you ramped up. You're now creating the handle. Typically for these handles, you go back to, you could go back to about the 50% mark, which, would be which I see right about there, 1570. So there is that potential. And again, we're looking at a weekly chart. So this is bigger picture stuff. It's not something I'm going to be able to give you a perfect entry on, on an hourly chart, but, there is obviously the potential for that. So 1570, and you can see that was kind of former support area. There's some support there that I found in the past. So I think, if we get back to that 1570 area, likely the bottom for gold, but you never know, right? I mean, if this is not going to be a cup and handle and this is just going to be, continue to sell off, then could go lower. So we just have to react with what we see at the time that we see it. And then if something changes technically, you take action. All right, let me go back here and see what else we got. Trying to kind of keep up with this. KHC, Walmart, Riot's Bitcoin related. Obviously, these aren't. I don't know what MDLA is. KHC is one that I've talked about in my videos. You'll see here. Let me find that one. Well, let me just pull it up. I keep an eye on this one, but this one to me looks bullish. Let me get back to the daily. Weekly charts are just good for bigger picture. It's not going to give you a good entry. I mean, it's just more of like an investor kind of chart. That time frame, it's good for potentially investing, but for trading or finding good positions. And I like to invest. I do invest. I've got long-term positions, but I use my trading technical analysis to try to find the entries on those so I can get the best allocation that I can find. Anyways, all right, daily chart. On Kraft Heinz, you've got a gap right here. And we're getting, there's the gap, and there's the top of the gap is way up here. So I marked these two levels. First level of resistance, $42. Second level of resistance, right around $47.87. All right, we're so close now to filling this 42. I think that's very probable and likely. And then I think it's also, second target would be this, about $48. And I think that's probable too. Momentum is up. If you can see the momentum, no bearish divergence. I already have that marked out where you just have higher highs in momentum, and see the RSI there, or the PPOC, you're making higher highs. So momentum's still there, all right? It doesn't show signs of fading momentum yet. Now, yes, if you can look at the tighter time frame and notice that, yeah, there's, you are starting to get some bearish divergence on the daily. But again, bearish divergence is not a reason or a sell signal, okay? So it just tells you that a trend reversal's likely. We're close to filling those gaps. I think we're going to do it. That might be the top of this move for the near term at least. And we also have this uptrend line. So the bearish divergence to me would just signal, okay, watch this trend line, watch for a break of the trend line, and that's your signal, all right? And until you get that, we're likely, going to come down, hit the trend line, bounce, go fill those gaps. That's the scenario I see playing out on this one, and I don't see anything telling me anything different. All right, let me move on. What's LSPD? LSPD. Light speed. Interesting. I use Lightspeed Desktop Trader for my trading platform. That's kind of an active trading platform. I don't know what this is. I don't think that's related, but LSPD. That's the Toronto Stock Exchange. I don't know. I'm not sure if you're in Canada. We can look at the New York Stock Exchange here. Not a lot of history. Sometimes, you have to, yeah. All right, so somewhat of a trend, there's not a lot of history. The less history, the less accuracy. Clear negative divergence right there. You can see that negative divergence. It's in the PPO too, right there. So, and when I see negative divergence, I start to look at, okay, how's this behaving when it makes these divergent highs? Okay, so there's a divergent high there, sell off. Another slightly new high, sell off. That's a divergent high, popped above it, kind of sold off. And that's a new high. So it's making a series of these divergent highs. And then, that's a bigger sell-off. Might not look like much because I use log scaling, but if you measure it, that's a drop of 35%. All right, so log scaling hides it. If I turn the log scaling off, it and you look at it, it looks like a bigger drop, right? So, and now we're bouncing. I don't see bullish divergence. So for me to say, okay, this negative divergence likely played out, I usually start looking for signs of bullish divergence. I don't see anything in the daily. You've got just a drop in price, drop in momentum, that nothing's diverging. Looking at the hourly, no bullish divergence in the hourly as well. So you'll see here on the hourly, just shorter time frame, bullish momentum on the short time frame, and bullish price. I don't see a signal or anything telling me that this bearish divergence has played out. So what I would look for on this one is, yes, you can run up and make a new divergent high. There's no sell signal here or reason to get out of it. It can continue to bounce off support and move higher while continuing to extend the divergence, which would look something like, just extend out. I'd wait for a break of this trend line right there, some sort of impulsive breakdown. That would be your signal. So if you're long, probably just stay long with the full understanding that, it could easily come back down to this trend line. It's not in an area that I would want to just, I wouldn't take a position here, I wouldn't get long or short. But if you're long, I'd probably just trail stops up. So if it's going to pull back, maybe you don't have to ride that back down. And yeah, all right, moving on. Well, TNX is the 10-year treasury, and that's obviously the big news that's going on right now, and I'm watching that very closely. So your TNX here, we're breaking trend, basically. You've got a downtrend line. This just shows your 10-year treasury rate, TNX. So if you're interested in watching that, which I think you should be, especially right now, there's huge multi-decade kind of things happening right now based on the interest rates. So it's important to watch. You have a downtrend line on the daily, and this is going back to 2018. So this is when the Fed was doing their repo stuff, and they were raising rates and saying everything's going to be on autopilot, and then they switched and were like, oh, we're going to cut rates. They did the flip-flop 180. The reason why they did that back here in 2018, I'll just show you. This is what a lot of people don't realize, or at least this is what my interpretation of it is. Back in 2018, if I can get this chart to go. on the, let me see here, get this to snap. There's your bull market right there in, the 2009 lows. And here's here's what happened. Right in 2018, we had a nice bullish trend and we broke trend. The Fed realized that they broke the bull trend. They watch charts, they have technicians. They realized they broke the bull trend, and they are doing everything they can to keep this thing going as long as they can. So this is where they reverse course. They broke the bull trend and then they changed their policy. So all this rally in 2019 was Fed multiple expansion because they dropped interest rates. But again, technically, we just keep struggling. All right, the Fed it drops and the Fed pumps down here. It drops, the Fed pumps down here. Okay, we're up here. What do you think? Do you think the Fed's going to pump up here? I don't know. I think right now, going back to the interest rates, the Fed's letting these interest rates rise. The Fed's reactionary. They're letting the interest rates rise. We broke trend. This is a weekly chart now. Clear. I mean, this is a massive move in bonds. I mean, this is just parabolic. So this won't go on too long. There's going to be a pivot that's going to happen. Whether it's, the Fed coming in and doing more stimulus directed directly at the bond market. One thing, though, I think is the Fed being reactionary. We're going to get rates continuing to move up. Next, let's see if we can find some sort of resistance. We got a gap right there. So that looks like a level right there. See the gap, and then hit it as support, zooming in just to confirm. Broke, held as resistance. Yep. So I'd say that's probably our next level, and that's about 2.12%. You got a little bit of some reactions right in here, about 1.95, but again, we'll just call it 2%. It's a round number. What's the market do while rates are rising up to 2%? I suspect the market's going to start to panic and have a big, a decent size move down before the Fed steps in. Again, the Fed's reactionary, so if the markets hold up and interest rates rise and the market says we're all good, the Fed has no need to step in. There's nothing wrong. All right. But when the interest rates rise, there's likely going to be things that are bad because of, obviously all the debt. Okay, let's move on. Yeah, IWM. I've pointed out IWM in my last video. You can just go back and watch that for an update. Johnson & Johnson and what PFE, is that Pfizer? I think that's Pfizer. All right, Johnson & Johnson. I don't track this one too much. It's not a big mover. This is kind of more of I'm on the weekly chart here. So weekly, let me just see if I can mark something out here. Just give me a second to try to make sense of this chart. Again, we're looking for right there. That's about it. All right, so there's your December, or this is your bull market. Going back to 2009. Reaction support there. Reaction support there. I threw this one out. Again, this is your COVID drop. So I just throw that out because it's a momentum move that you didn't get any real reactions. You just got a snap down and a snap back. And so I kind of that's like a mulligan basically. You throw that out and you look for reactions where you actually get, verified multiple reactions. So we've got 1, 2, 3, stepped in a little early right there, but close enough to call it, again, they step in early sometimes. That's your bull market. Looking at the daily, see if I can find anything. Negative momentum. So you can see there on the daily, bearish momentum, not divergent momentum though. There's a difference, right? The negative momentum's moving down, price is moving down. There's no divergence. They're not going in opposite directions. So you have negative momentum. But again, that doesn't tell me there's a trend reversal that's going to happen. Divergence is the cue for trend reversal. This is an island cluster top right here. See that island cluster top where you gap up, kind of trade a few days, and then gap down. Sorry, I had to get some coffee. There's your island cluster top. And look at the back test. So when you get an island cluster top, you mark the bottom of the level. And then what I like to do for these is mark the top of the cluster, which is, it's right about there, I guess. And sometimes what they'll do, the market makers, when you have such an obvious technical level, they'll pop into this range again. Sometimes they'll pop above the top, but they usually won't close above the top. A daily close above the top negates that as a reversal pattern. But if you pop into the cluster, that's often the area where the market makers are running stops and taking a position. Market makers, big institutions, they need liquidity. So what they need volume and shares being traded. One way to create that liquidity that you need if you want to take a position is run stops. So people will set stops at the cluster, they'll run it, they'll pop it, forcing people to exit their position, and they'll be taking that position throughout that day or multiple days without having to move the price. You take a big position in something and you move the price against you and you don't get the best allocation. So, all right, so island cluster top, you can see we rejected right there, sold off. All right, so that's the daily. Yeah, I mean, obviously the 200-day. Looking for some horizontal levels. Looks like I'll have to tighten this one up. I can't find the horizontal levels as quickly as I need to. Sometimes I have to look at these a little longer. So I got to move on. Baba, huh? Yeah, Baba on a video a while ago, I remember saying I thought that Baba might have put in the top for this stock, and it might be, entering a bear market. I don't remember exactly why I said that. I have charted this one. Let me see if I can see any reason why, but I do remember making that comment. So we have an uptrend line here. I probably can adjust this slightly. Let's just adjust this. Yeah, it's right about there. Yeah, there it is. So, you got a reaction, undercut it a little bit, but reaction, multiple reactions. All right, so we're within the range of that trend line and above trend, clearly. So here's your negative divergence. I had it marked out in the past. This was your divergent high. This was your signal. All right, see momentum? See how it was dropping off right there? You made a new higher price on less momentum. All right, it just means less and less people are participating. So it's getting thinner basically. And that was your divergent high. Here's the trend line to watch back then. Obviously this is played out. You got a trend line break, back test, and then, it dropped right down to the longer term support line, and that's where it held and bounced, and we're coming back down to it. So longer term support's not broken. You want to keep an eye on that. And we're near it. So objectively, we're not at it yet. I mean, objectively down here is where you could go long or be interested in going long. That's the objective area. And, if it breaks trend, bail from your long, or we could wait for, a break of the trend and then short the thing. I don't see bullish divergence. I marked this out. It's just bullish momentum. See how we're moving up in the momentum and price is moving up. So I'd watch that trend line. If we hold and we bounce off that trend line, then I've got some levels already marked out here. It looks like I would probably watch for 241.50 area. A break above that, we're likely going to head up into this range, and it's not the cleanest. This thing trades a little messy, but right up in there around 266.50 as your next level of resistance. All right, moving on. Let's see here. CMG, kind of just going through the list here, guys. What's that? Chipotle, I think is what that one is. Yeah. All right, CMG. I know this is a expensive stock, but again, people get caught up on expensive and cheap, like when the dollar price. That doesn't matter, you know. It's all about percentages, you know, percentage gains. So this one, yeah. So there's your COVID drop. This is your 2018, it looks like. Yeah, I can't make a trend line. You know, if I can't make it on the longer, you know, I've only got 2 data points, so I can't justify that as a trend. So we have to just tighten it up. You know, sometimes if I can't make a longer trend line, I just look at the closer, you know, I just narrow it down. I'd say right about there. Yeah, that actually plays well with what I've seen in tech and some of the other stocks. So you've got this daily trend, reaction. You got a third reaction there, and this is a bear trap. All right, we're seeing those in some of those other tech stocks, you know, bear traps and whatnot. Many of them sold off and played out really well. I've got them all highlighted down here in red. All the high flying ones that you would hear everybody like, you know, piling into. I was tracking those because those are the ones where I was looking for the momentum to break. But we're seeing in some of them we're seeing bear traps. Like Chewy, for example. You know, it's kind of, it doesn't have to be a bear trap, but it could. Going back to CMG though, yeah, I just watched the trend line right there. That's what I'd watch. And right now it's, you know, it's about 1397. Let's look at the momentum, see if we can gain any knowledge from that. Yeah, slight negative divergence, a little bit. PPO's got clean and clear negative divergence there. Look at that. I like when it's a more obvious and more pronounced. I like it a lot better. So, well, now that I look at that, you know, yeah, you could say we've got it there as well. All right, so negative divergence across both momentum indicators on the daily. That's a more significant chart. So I would look at, you know, I would just wait for a break of the trend. It's very similar to the rest of the charts where we got a bear trap, but they look like they're going to break again. But you got to wait for that. And so if you're long this thing, I'd probably just ride it long because it obviously hasn't broken trend. But if you get that impulsive breakdown, then, you know, that would be your sell signal. The problem, though, with that is sometimes when you get the impulsive breakdown, it comes in the form of a big nasty gap down, and you end up giving back, you know, weeks and months worth of profits potentially. So another way to do it is to lighten up. You know, that's another way. As a short trader, you know, when I'm taking short positions, I take long positions too. I just am more interested in looking for shorts right now. But when I take short positions, as I fall to support levels, I lighten my trade up. So by the time I get to my final target, I'm not fully loaded. It's just the nature of, it's the nature of short trading. You need to take profit into support levels and just active trading as well. So it just depends on where you've gotten position in this thing. If I bought it down here in March, for sure I would not be in my full position up here with negative divergence. All right, I would definitely be lighter. Maybe that's a quarter position, a half. I don't know. Each person's different. Watch for a break of that trend. Moving on. Let's see where we were at. If I skip you, I apologize. EEM, that's emerging markets. I like emerging markets in general. You know, the dollar. Excuse me. I think the dollar can rally from where we're at, but if you look at the dollar, well, look at the dollar futures. You've got a major trend that has been broken. Looking at the weekly. So, you know, this is this is going back to 2011. Trend, support right through there. Broke trend, clear breakdown. So we can back test all the way back up to 96. That's the area I'd be looking to, if it was to go back up there, then that would be the area you'd want to look for anti-dollar trades, most likely, because that's going to be major resistance for the dollar. Emerging markets are kind of an anti-dollar trade. So, but again, we're also at resistance here. All right, this might be it. 92 might be the level. So a definitive break above 92 and likely going to get an impulsive move up. But if it can't break above 92, then this is likely the top. You can see we held support through here. We broke. We're back testing. All right. So on the dollar, and we can look at the daily real quick. We do have bullish divergence though, and I pointed that out back here. On DXY, I pointed it out. This was your bullish divergence. See how we started to move up? It showed up right there. And that was basically your low in the dollar, and we've been trending higher ever since. I got to get rid of that. But, is that the end of the move? Well, watch 92. Moving on. The VIX. The thing about the VIX, just for a macro kind of picture, not the VXX, the VIX. You've got this range. If I roll back, the big picture is, look, for many years we were trading below this area with, spikes above, obviously, but the bulk of the trade was below kind of this 22, and then recently the bulk of the trade has been above that area with kind of little dips below. Each one of those dips have been buying opportunities so far. I don't see a changing character on that dynamic right now. You have bullish divergence. See the bullish divergence? We get these little dips below. So maybe we get another dip below, down in here. Maybe continue the bullish divergence. The VIX is a tricky one. I usually watch the SPY to help me with the VIX. So I look for the SPY to start showing signs of breaking or breaking trend in the SPY, and then I'll grab the VIX. That's how I play it. I watch the SPY to help me with the VIX. Moving on. Yeah, NUG. NUG is I think it's 2 times leveraged gold miner ETF. Yeah, it is 2. Maybe it used to be 3, but I trade that one. I trade that one a lot, but gold is kind of building. NUG is a momentum trader. So, if you can find some good momentum, it can be good. I'm bullish gold right now, so in general, I think NUG's probably, in my opinion, could be good. Again, everything on this channel is just my opinion, but watch this downtrend. You got a downtrend, and NUG will bleed value or decay. Yeah, this one, it doesn't chart as good either, and that's one of the reasons. It will decay over time. If gold trends lower, NUG will decay lower. If gold goes sideways, the decay will eat away at NUG. If gold goes up, the decay actually helps. NUG. It'll outperform gold and miners and stuff. That decay actually works in its favor if it's trending. I just watch for a break of this top trend line there on NUG. All right. Why don't you guys give me some thumbs up if you haven't done so? I do appreciate that. We'll go for 20 more minutes and then I'm going to wrap. TLT, I have no idea what's going on. I don't know what's going to happen with TLT. Again, all I can assume is the trend, and the trend's not the cleanest on TLT because we have this big breakdown, but we did have several reactions on TLT. Here's the weekly chart. We based out there, based out there, based out through there. Then we broke. Yeah, this is 2018, so this is where the Fed, they were hiking interest rates, and then they did their 180. So this is kind of Fed manipulation. Likely the interest rates were going to break naturally on natural causes. They would have broke, but the Fed stepped in. So look at where we're at now, and this is natural forces. The Fed has not stepped in yet. I can't imagine the Fed's not going to try to step in, but that doesn't mean there's going to be not going to be some market pain. You know, there might be some market pain first. All right, the interest rates might, you know, they might drop all the way down here. You know, I don't know. You know, right now we've broken that trend, and I don't see any signs that we're reversing. All right, if I look at the daily, we did have a divergent low on Friday. It's not confirmed though. You can see I had it marked out like, you know, right there. Okay, this is a divergent low because this low was made on less momentum. Not confirmed though. We need to see the RSI kind of turn back up. If it just keeps lower, we'll just burn right through that. All right, so it's not anything that I would say the divergence is solid enough to go off of. If I was gonna say, you know, given the momentum and the direction, I suspect TLT continues to sell off until the Fed steps in. That's what I would say, and I think the markets probably will start to sell off as well, based on the interest rates, you know, and then the Fed's gonna step in after there's some, you know, they're gonna react. Let's see here. GMIA. Just try to keep your picks to one pick. There's lots of people. I can't go through everybody's. Someone's asked me about this one before because I don't even know what this is, but for some reason I have it charted. There's your uptrend line there. Still within trend with negative divergence there. So you've got negative divergence, which means, you know, you're likely going to see a trend reversal. And, you know, it's had a pullback. I mean, that's probably pretty sizable. 50% drop. It's a pretty good sizable drop. But this one's obviously a runner, so we could just be... I think we're bouncing and likely going to, you know, keep going lower. That's what I see. Maybe it takes a little time and, you know, heads down here. But I don't see bullish divergence, so I see no change in trend. Right now, I see downtrend in momentum, downtrend in price on the shorter time frame, larger time frame an uptrend. So we could come back into this trend line, hit that, and maybe bounce from there. A break of that trend line would signal a longer term downtrend. So gold miners, someone asked if gold miners can drop when gold drops. I mean, fundamentally, yes, that's how that should work. But sometimes you'll see the gold miners front run moves, and that's what I think I'm seeing. If you look at the miners, let's go up here. And a lot of these miners, I mean, if you just look at, you know, we can look at GDX. I mean, look, we've had a good pullback in the miners. You know, gold obviously has had a pullback as well from the highs. So the pullback has all been there. You know, everything's, you know, it's not like gold's up at the all-time highs. Gold's had a pullback. So again, I like to buy things when nobody else wants them and they start to show signs of bullishness and start to break, you know, resistance lines. That's when I like to buy them. Much like oil, you know, it's the exact same thing as oil. You know, if you followed me on that oil trade, we can look at, you know, well, XLE. I mean, this is it. I was talking about buying it. I put out an oil stocks video specific to oil stocks back here. And I said, these are the ones that look bullish. Everything else was raging to the upside. Oil was just lagging behind. And I said, that looks pretty bullish. And I mean, look at that. I mean, just off to the races. So again, that's what gold looks like to me now. Doesn't mean it's going to play out that way, but that's kind of how it looks. Looks like we're in the area, at least for the gold miners. And I trade the gold miners mostly. I don't buy physical for the most part. All right, moving on. Let's see here. What, Mogo? What's Mogo? I don't have no idea what this one does. Pretty thinly traded. You can see there's like no volume. Not a lot of history. Recently there's volume, but again, that's likely just retail trade. This one, I don't see negative divergence really. I mean, you had a little bit right there, but it's pretty small. Sometimes I just can't chart something. This one I don't know on this one, to be honest. At all-time highs. Yeah, I don't know. I don't have an opinion. Silver, I don't chart silver too often. I just prefer to chart gold, and then if gold's bullish, silver should be bullish. Maybe I'll spend some time looking at silver a little bit more. I know there's obviously silver's like the wild child of gold, basically. So it's just a momentum runner. Gold can trend higher, and then silver just does these massive parabolic spikes up and down. So maybe I'll look at those and put those in a video. Airbnb, that's a new IPO, and so they don't have a lot of history. When you don't have a lot of history, it's hard to make out any information on the chart. I would say right there, slight undercut, looks like that bear trap across a lot of these tech stocks. Uptrend, and no negative divergence. You had negative divergence back here on the PPO. Again, there's no history, so there was a little bit of negative divergence, so that was a divergent high. You did get a pretty good pullback from that high, 26%, but we're above trend now. So I think it's uptrending until you break that trend. All right, Peloton. Let me see where I find Peloton. I know I got so Peloton was a really good trade for me recently. I kind of charted that out, and I know it doesn't look like much because this is log scaling, but if you take off the log scaling, it's more like that. Big. That's a big drop. And we caught that drop pretty much perfectly. The day I entered, it was right there, circling it, and obviously it plunged down, and I covered my trade right down here. At this 98.79, and the 200-day was also a spot. I think I covered some at the 200-day as well, and so far that's held. So going to the daily, let's go back to log scaling. We bounced off the 200, makes sense. Ran up to the first level of resistance, 118.50. We have not recovered that, where we've rejected so far. Looking at the daily, there's no bullish divergence on the daily. You can see here that we're just, let me zoom in. We are, making lower lows and lower lows in price. Momentum moved up, price moved up. All right, so we're not diverging. We're just moving with the momentum on the daily. Hourly probably has bullish divergence, I would suspect. Let me look here. Yeah, so the hourly had bullish divergence right there. This was a divergent low on the hourly. So this right here was your divergent low, and you've got the bounce. But, how do we determine what's enough of a bounce, and that can be tricky, right? So ultimately, I look at resistance levels. I always take a step back at the larger time frames and see if anything's, the larger time frames, the daily takes precedence over the hourly in terms of major trends. So if I see a major trend in the daily and I see a counter trend on the hourly, I go with the daily as the major trend, and I look to, short, or in this example, would short at resistance levels, because the major trend says that this major trend is going to continue. If you break the major trend, or if you break this resistance on the daily, well, yeah, we can start to change trend, but there's no trend reversal on the daily. So as of right now, I see that as the major trend until that changes. So yeah, we got rejected right there at 118, and we can consolidate for a while. We can, we just have to watch those levels and take action around key levels. Otherwise, I would say the trend is down. Clearly, the trend is down. All right, this is a downtrend, and we are, going to continue down until we see signs of a trend reversal. All right, moving on. Someone asked if I listened to Harry Dent. You know, Harry Dent is not a technical guy. Well, I mean, I know he looks at technicals, but for the most part, he just kind of says the same story. He believes the dollar's going to move massively higher, and the market is going to move lower for a big crash. And, you know, I don't know if I believe in a big crash. I think that prices are... The technicals tell me that we have broke the bullish trend. All right, if you really want to know my thoughts, I'm going off the SPY chart, and the technicals continue to tell me we broke the bullish trend. So I'm looking for a change in trend. Is it going to be a big crash? Well, it could be. I don't know. It's not going to look like COVID. It's not going to look like the COVID plunge. You know, it's more likely going to look like a slope of hope, where by the time people realize that we're in a bearish trend, they won't realize we're in a bearish trend. The buy the dippers are going to think bullish trend. We dip, they buy. We dip a little more, they still buy. They're still bullish because they think about the past and how bullish everything's been. They think that will continue. And then by the time they realize, you know what, something's different. I'm losing a bunch of money here. It will be well known we'll be in a bullish trend by the time they realize. And then you get some panicky action. And that's usually going to be the end either of the bear market or the end of that leg of the bear market, you know. But I think it's likely going to kind of, you know, if we're going to sell off and start a bear market, I think it's not going to be realized by most. It's going to be a sneaky bear market where it's kind of making lower lows over time and, you know, following the slope of hope until it becomes obvious. When it's obvious, everyone panics. So it's usually going to work its way down and not obvious. So yeah, I think that's what the charts tell me in the SPY that we're going to do. But doesn't mean that can't change. The VXX, I did analysis on the VIX. The VXX, I think it's in an area to buy, but again, watch the SPY. I look for the SPY to give me cues. Volatility trades for me are like icing on the cake. So when I see the SPY, that's going to be my cake. If I'm going to short the SPY, I'm going to take a bigger position in the SPY, and then my icing on the cake, or my alpha basically, is going to be a vol play. And so I'll take a smaller position in like VXX, and then typically what happens is when it becomes obvious, or you get that break in the SPY, and everyone scrambles for put protection, that's when you get the big spike in the VIX, and I take my profit. I take my profit on the VIX. I might not take profit on a SPY short because that can continue to trend, but that initial scramble for puts and protection, that can last a couple days or, you know, even weeks, but that initial scramble creates that huge spike, and that's usually the move that you're going to get in the VIX. And then the VIX can continue to sell off even when the markets are selling off. So you look at bear markets, and the VIX will fall in bear markets. So that's why I look to take that on that initial spike. I already did BABA. Fastly. So I know that's a high-flying kind of a retail favorite, or it was at least. Was back here. So we got negative divergence. That's just continuing. We didn't make a new high though, so that's actually not a divergent high. The last divergent high was right here, and we've just sideways. Watch this level, 73.90 area. If it recovers, this is your bear trap, and if it breaks, then this is a thin zone right here. See how it just shot straight up? There's no real trading. It's just day in and day out right through. That's what you call a thin zone. So look for it, if you start to come down, look for it to, this thin zone will just get wiped out. It's very thin. There's not a lot of traders with, key positions. So it just will likely just trade straight down to 45.20 area, or, 48.50, kind of in this zone right there. Let me just kind of scan through here. So if you want QQQ and SPY analysis, I just did that on my last video that I put out yesterday, so you can go back and watch that. FDX, FedEx, yeah. So FedEx, let's see here. So this one had a bearish rising wedge up here. I was talking about shorting it right there. I called the short, right? This is on my video. I said, okay, it looks like a good spot to short. And that did play out. You know, that's a drop of 20%. And, you know, there was your negative divergence. So that, see that divergent high right there? Bearish rising wedge, divergent high, broke trend. That's about as good as it gets. And then we just pretty much fell straight down. But we did put in bullish divergence right there, so I can just get rid of that since we're done with that. And there's your bullish divergence. See it right there? Sorry, this thing's in the way. See that? That's a divergent low. All right, so that signals a trend reversal is likely, and we're already starting to see that in the price action, obviously. I missed this one, but and we had some resistance right here. So you can see we held support all through here, broke, it was resistance, and, you know, moving higher. So bullish is what I'd say on that one. Where do we go? Well, I think it's likely we probably run up and test this trend line that I've got marked out. I don't know what this trend line is. Let me look at that, see what I was thinking there. Yeah, I don't know if it's the cleanest trend line, but probably make a new high. Let's just say that, which will be up near that trend line. That's what it looks like to me. If you're long, I just trail stops. But yeah, another 15% up or so. All right, guys. We got 2 more minutes, so I'm gonna just end it there. Let me guys know what let me know what you guys think. Give me a thumbs up. Leave a comment below. And if you guys haven't taken my course, go ahead and take that. I do appreciate that, and it's going to it will give you some of these skills. I've gotten a lot of positive feedback. So, maybe it's not the best presentation. I don't know how you guys think my presentation is, but but the knowledge that's in the course is all it's good, valuable knowledge that has worked for me in the past. I've had to learn that knowledge over lots of losses, and so you can hopefully skip some of those losses and just add a quiver to your hat with that skill set. So take the course. I put the link in all my videos. It's $99, and you go to look at these other guys, they're charging like $4,000. I just thought that's silly, because I'm not going to guarantee you guys profit. I'm not going to guarantee you guys wins. I'm not going to tell you how to trade, like give you, okay, I'm buying right now. Okay, now is where you want to sell. But I will put out my thoughts on trade ideas, and then that course will help you really spot the stuff for yourself so that you'll be able to take action. It's a lot better for you to be able to take action rather than wait for me to tell you something that I see. So, because again, this is a game of you got to be fast sometimes in this game. So that's all I got, guys. I do appreciate it, and I will catch you guys on the next one.